Hello and assalamu alaikum everyone. I am Kashif Kamran and welcome to the AAA pre-March 2025 mock debrief. The mock is published by ACCA on the 7th of Feb 2025 and you can access the mock on the ACCA practice platform under the practice exam. Now, the interesting part with this March 25 mock published by ACCA is that it is the same mock ACCA published for the September 2024 exam sitting. Now, I have already done my mock debrief for September 2024, and considering that the March 2025 mock is similar to the September 2024 mock exam, so students can utilize my September 2024 mock debrief as a mock debrief for March 2025 mock. Now, when you will look at my mock debrief for March 2025 exams, because it relates from the September 24 mock, so you might listen or hear me saying September 24, and you might get a bit surprised with that. So don't get distracted with that. I'm already making it very clear that the September 24 mock debrief is to be used for March 25 mock because both the mock exams are the same. So you will utilize my September 24 mock debrief, and that consists of 4 videos. The first video would be the overview of the mock, followed by a video on question number 1 debrief, then a question number 2 debrief, and a question number 3 debrief. So you will gain all the insights, all the analysis about what to do, how to do, the marking schemes, and all the tips and techniques I have shared in that particular September 24 mock debrief, which is now to be used for March 2025 mock debrief. So all of you, please take time out, do your mock exams, and submit to your tutor for review, and enjoy the 4 videos to follow this particular intro. All the best to all of you. Hello and assalamu alaikum everyone. I am Kashif Kamran and welcome to the day 1 of the AAA September 2024 mock debrief published by ACCA. And today I am investigating the question number 1 of this particular mock. Now, if you just have a quick overview of the question number 1 of this mock before taking on the practice platform and thoroughly investigating what was in the question number 1 and then evaluating 2 scripts of the students to identify what is good and bad in each script so you can learn accordingly. And then I will be guiding you about the marking schemes and some additional points to add value to your mock answers. Now, the question number 1 for the pre-September 24 mock was set around Thornham Textile Company. Let's see what was the main focus of this question. We know the question number 1 is set at the planning stage. There was a partner email mentioning that the materiality is to be set at profit before tax. Then the company was listed and it was a new audit client, which is an important information. There was a requirement for significant audit risk. We know that's quite a typical requirement since the changes have come in the AAA paper from September 22 exam. The examining team asked you to evaluate and prioritize the significant audit risk, and the marks there was 22. And the examining team specifically mentioned that you have to use all exhibits in developing those audit risk. Then there was a requirement for procedures. 2 procedures were asked for 10 marks. One procedure was on the share-based payment scheme, and the other procedure was around the planned closure of the Halt factory. Now, I even mentioned in my overview session of this mock that whenever you look at procedures in the question number 1 and you have a subject matter of a procedure, you're very sure that this particular subject matter in the case study is a very important or a very significant risk. And that is why the examining team wants you to develop a procedure on these particular areas. So the paragraph related to the planned closure of the halt factory will be important for two perspectives. Firstly, from that particular paragraph, you will be identifying the risk, and then later the paragraph will be used to develop your procedures. Same goes with share-based payment scheme. The same paragraph will be used first to identify and evaluate the risk within the share-based payment scheme, and then to move on developing your procedures. So you need to be very skeptical in exam, very alert in exam, because such things can save you a lot of time when you're very sure that these two areas of procedures are definitely my two areas of risk as well. Then there was a C requirement, and in the C requirement, the examining team was testing your knowledge around an ISA using the work of internal auditor, specifically asking you the factors which you should be considering in determining the reliance on the internal auditor. There was 8 marks for that, and there was a specific exhibit for this particular requirement where you need to go in and then develop the factors you should be using to place reliance on the internal auditor. You're very familiar with those factors: independence, competence, experience, and documentation. Apart from that, there could be something specific in the case which you can write in as well. So this is the overview of the first question. Now let's take on to the practice platform and let's look into the script 1 and script 2 of the students to understand what was good and bad within each script. Okay, now you can see the practice platform in front of the screen, and you can see the question we were discussing, which is around the Thornham Textile Company, and we have just taken an overview of this. On the left-hand side, you can see the 4 exhibits, the first being the partner email, followed by the background information, selected financial information, and notes of a meeting. And those particular exhibits, particularly the exhibit 2, 3, 4, will help you develop the answer, because the first exhibit is just about the requirements in the partner email. Now, let's evaluate the student's answer, and let's see if there is a need to go back to reading of the exhibits, if any, and to guide you about what best you could have done to make a very impressive answer. Now, I've selected 2 student answer, so far, so forth. Today is the 21st of August. And by this point in time, the emails I have got for the pre-September 24 mocks, from those emails, I selected the 2 best scripts to do my evaluation for this particular mock debrief. Now, importantly, this mock debrief is to be watched after you have done your mock. So when you're looking into this mock debrief, you know the scenario, you know what was there in the background information, what was there in the financial information, what was there in the notes to the meeting, and according to that, you can enjoy this particular mock debrief. Now, just to give you a quick idea, you open up the partner email, you know the partner email have all the requirements, and I've just spelled out the requirements at the start of the session with you. Importantly, the examining team tells us in the C requirement that there is an exhibit number 4, and you have to use the 4th exhibit for determining the factors you should be using in placing reliance on the work of internal auditor. So for that 8 marks requirement, you have a specific exhibit number 4. So when the examining team says you need to evaluate all exhibits for the audit risk, what the audit team means is, what the examiner team means is the exhibit 1, 2, and 3, which will be used for audit risk. The 4th exhibit is specifically for the 8 marks requirement. Okay, then you move into the background information and you open up this, and you will see a lot of information here. Particularly, you can see those that very important heading we were discussing, that examining team wants you to develop procedures on the planned closure of the halt factory. And we had a specific risk in the planned closure of the halt factory as well. So this particular paragraph would be very, very important for not just procedures, but for the audit risk. And you need to be very sure of writing a risk from this particular paragraph. So just let's highlight on that. And then you move on down, you will see there is another paragraph being marked by the examining team: opening of new branch in Farland. Now, whenever the examining teams gives you a background information with specific headings, every heading will have something special, and you need to identify a significant risk from every heading. So we had a heading for hold factory. We had a heading of opening of new branch in Farland. We moved down, and that finishes off the headings in the exhibit number 2. So at least we have two very specific areas to focus on: the halt factory and then the new operations in Farland. We already know this is a new audit client, so that's already adding to your number of marks. So probably my heading is new audit client, my heading is halt factory, my heading is opening of a new branch in Farland. So far, I'm just getting those three headings in my mindset. That's what I'm doing in the reading and planning time. And then you open the next exhibit, which is selected financial information. Within the selected financial information, you see that the examining team is giving you some extracts of the financial information. You can see the number of revenue, profit before tax, and the year-end share prices. We know the profit before tax is an important number because that will be used for determining the materiality. The partner wants us to determine the materiality on the basis of the profit before tax. So we'll be using that specifically. And the profit before tax is $8.8 million. So we'll be using that profit before tax $8.8 million to determine the materiality for this particular textile company. Revenue, if you look at the revenue has increased quite significantly over the last year. It was 57,400. It is now 79,400. So any intelligent student can just identify the increase and decrease, and then can relate this increase and decrease with the fact that it is a listed company. And if there is a significant surge in revenue, it could be one area where the management could be biased in window dressing the financial statement, because normally the management of listed company is involved in creative accounting. We cannot write journal point of listed company in exam. We cannot say a listed company has a risk of management bias. No, we have to connect it with something. Over here, we have a connection. The revenue is rising. You need to calculate that rise in revenue. Probably the rise in revenue, which I have calculated, is 38.5%. So that's quite a significant surge over the last year. And that can develop my point towards a more specific risk of management bias, not just a journal listed company, but a listed company having a surge of revenue of 38.5. And the same is going with the profit before tax. If you look at the surge in profit before tax, in the last year, it was 6,500 or 6.5 million, which is now surged to 8.8 million. So that surge, when I calculated, was approximately 35 or 35.4%. So both revenue and the profit before tax is increasing a lot. And as an auditor, because we're doing the first year audit for this textile company, I need to be a bit skeptical. Is there any underlying risk of management bias or creative accounting going on, which I should investigate when I start the audit of this textile company? So particularly, I need to be more alert when performing procedures around revenue or procedures around expenses, because that will accumulate to a profit before tax number. So I hope you're getting my point, right? A journal listed company point converted to a risk of management bias is useless, but a listed company point related with numbers, and those numbers helping you to identify that there is a certain underlying risk of creative accounting, and we're using two numbers, revenue and profit before tax, will definitely add value to your answer to impress the marker checking your paper. Okay, then under this financial statements, you can see the specific note number 1. The note number 1 is telling us about that the information has been prepared on the 1st of July 20x5. So that is like 3 months before the year end, because we are at the planning stage. And the year-end share prices is currently unknown. So we don't have the share prices for the year-end currently. It is not deemed appropriate to project the share prices at 30th of September 20x5, because a lot of students, when they don't find a value in the current year, they simply take the prior year value and they project it. So examining team is telling you not to project the prior year share prices. So the prior year share prices is 3.12. You cannot just use that to project what can be the share price for 20x5. So examining team is giving you a alert not to do that. So share prices are not available. The reason has been given. There are specific headings coming here now. We have a share-based payment scheme. We know you have to make procedures on that, and definitely means there is a risk underlying the share-based payment scheme. Then you have a specific paragraph around litigation. That means there is any specific risk in litigation as well. So that wraps up, and we have a flood damage too. So we have another heading. So far, so forth. If we just recap, the headings I've got so far is a new audit client, which was one very intro paragraph that this is a new audit client. Secondly, I got a heading about the planned closure of the Halt factory in order. Then I got something about a new operation in Farland. Then I started this financial information. I got some significant surge in revenue and profit. Knowing it's a listed company, I can make a point of risk of management bias. So that's like point number 5, sorry. No, that's like point number 4. We had a new audit line, just recap. We had Halt factory, we have planned, we have the new operations in Farland, fine. We had the 4th point, analytical review, giving us a risk of management bias. We have the 5th point, share-based payment scheme. We have a 6th point, litigation, and we have a 7th point, flood damage. So that's quite a good number of risk we are finding. The exhibit number 4 is for part C. So by the end of the exhibit number 3, we have a fair amount of risk on hand to develop an answer for 22 marks. Let's see my analysis first before we move on to the script number 1 and 2. Now, in terms of my analysis, if you look at this, this is how you can be clever in exam in your reading and planning time. You know, 1/4 of your time is to be spent on reading and planning. I've already guided you a lot of time about the time management. You have 1.95 minutes per mark, so it's a 50 marks question. So you multiply that by 1.95, approximately 98 minutes on your hand. Of that 98 minutes, 1/4 is the reading and planning time, which is approximately 23 minutes you will be spending on reading and planning. And this is all what you can do. Look at the headings, look at the financial data, and be sure how many risks can you easily extract down. Now, if I am going with this, I know I have to put the answer in the format of the briefing note. And I know it is 2. I'll just copy this from the partner email to save my time. I'll go to the partner email. We'll just copy the 2 from subject and date. We'll do the 2 and from vice versa. And we just go back to the word processor and we get the 2 from subject and date. We know we never change the subject of the partner email and the date will remain the same. Only the 2 and from will swipe. So the from will become the 2. So it's to the Wendy Runton, the audit engagement partner, and it's from basically the manager, the audit manager. Just let me check that out. It's from the audit manager, right? So that's the structure. Then you start the introduction of the briefing note, and I'm not writing it down. Then there is a first paragraph, which is about significant audit risk. So you will write the significant audit risk, and under that you will write materiality as the first paragraph. Followed by that, you will start writing your audit risk 1, 2, 3, 4, 5, whatever. Then you have a B requirement. And for the B requirement, you're looking into the planned procedures. You have planned procedures on the Halt factory, and you have planned procedures on share-based payment. And then finally, you have a C requirement where you need to consider the factors in placing reliance on internal auditor. And you have a specific exhibit number 4 to deal with this. Okay. Now, introduction, what to write in that. I'm not giving you that. One misunderstanding, after you write the introduction paragraph, you can put the materiality paragraph right after that, like this. Heading materiality, you can write the materiality paragraph and then start writing the significant audit risk, because the first requirement is significant audit risk. Or you can remove this materiality paragraph from here. Under the heading of significant audit risk, you can write the materiality paragraph. Both approaches are acceptable. But if The requirement A after introduction is business risk. You will then write A requirement business risk. You will write the whole answer for business risk. Then you will put the B requirement significant audit risk or significant risk of material misstatement. And then under that, you will write the first paragraph, materiality. So be sure if business risk comes in, you will first solve business risk. Then you will put the heading B. B is audit risk or B is risk of material misstatement. Under that, you will put the paragraph of materiality. Now, in this question, you just have the audit risk. So you can put the materiality paragraph right after the introduction or under the heading of the audit risk, will not make much difference. Okay, now just one thing which I need to discuss about you. You know, there are significant audit risks for 22 marks. So 22 marks, and you know, 3 technical marks are available for the determination of the materiality paragraph as per the new structure from September 22 exam onwards. So you are very familiar with this by now. So 3 marks goes from here. We're left with 19 marks. Now for 19 marks, we need to develop the audit risk. Now each audit risk is 3 marks. Yes, there could be some audit risk like new audit client, which can give you 2 marks, or a risk of management bias listed company, the one we discussed just now, can give you 2 marks. But normally the risk which have accounting treatments like share-based payments, like litigation, like halt factory, flood damages, where you have accounting treatments coming in, those sort of risk gives you 3 marks each. You have to comment on the materiality, you have to comment on the accounting treatment, you have to comment on the underlying risk and then impact. You know this approach, this will fetch you 3 marks. So ideally, if I look at 19 and I divide this by 3, 3 6 are 18. So I can write 7 risk for 19 marks. But yes, if you have audit risk of 2 marks, like new audit client, analytical review, that sort of risk is giving you 2 and 2, 4. So you need to see that how many you need to write reaching up to 19. 7 risk on the safe side. Then you write this materiality paragraph. This materiality paragraph, you know how to write it down. I'll just show you the student answer. I've given this answer many times, how to write a paragraph on materiality. This will give you 3 marks on it. And then you're left with 19 marks and you start writing the audit risk. Now, in the order we found the audit risk, if I just remember that, the first is a new audit client. That was the first thing we got from the opening paragraph. After the new audit client, we got the second risk was the halt factory. Then the third risk we got was operations in farland. Operations in farland. Then we went to the exhibit number 3, financial information. We got analytical review, where we found the increase and decrease in revenue and profit. So I can give the heading of analytical review, and I will link this analytical review with risk of management bias. It is a listed company. So I will fetch 2 marks for this analytical review because I'm linking it with the risk of management bias. So 2 marks for this. Then in the order, we got share-based payment. Then in the order, we got something right, litigation. We got the flood damages. Now see how many marks are we getting. New audit client 2. Halt factory is more like an accounting treatment. It's IFRS 5, so we'll give you 3. Operations in farland is an accounting treatment around IS 21, because you must have read it by the time you're looking into this mock debrief. It's another 3 marks. Analytical review, linking it with management bias 2. Share-based payment will give me 3. Litigation is an accounting treatment. If I have a value, I'll get 3. Flood damages is an accounting treatment around IS2. Inventory, because inventory was damaged. So if we have value, will give me 3. So that's like 3, 6, 9, 12, 15, 16, 17, 18, 19, already going to 19 marks. So you need not to write all this. You need to choose the best to fit your 19 marks. Sorry, I got 19 marks, right? That's what we need. 3, 6, 3, 9, 3, 12, 3, 15, 16, 17, 18, 19. I got my full 19 marks. Sorry, I just looking at that. The marks was 17. Full 19 marks, and that sets the scheme. Now, one thing which you need to understand. There could be certain risk when you're writing them down in which you are doing a calculation, like you are finding a trend or you're doing a calculation, there are certain risks in this mock exam, which I will be showing you from the student answer, which involve calculating a value. Wherever you are calculating a value in any of the risk, that calculation is giving you 1 plus mark. So that calculation will give you 1 extra mark. And wherever you are finding an increase or decrease, that is also giving you an extra half a mark. So half a mark for the calculations, half a mark for the relevant trends, 1 mark for the calculation. Now, I think there is a calculation in the share-based payment scheme, if I'm not wrong. So the share-based payment scheme can fetch you 4 marks instead of 3 because you have a calculation over there. So in any risk, if you have an added calculation, so that will become 3 plus 1, 4. And the analytical review will absolutely remain 2. You will not say, okay, I found the increase in revenue or I find the increase in profit. So they will give me half and half, 1. Then I'll comment on the risk. I'll get another 2. No, analytical review absolutely will remain 2, connecting it with the listed company. But yes, if you're finding the increase in revenue somewhere else, like you're writing a point on revenue recognition, and there is a specific revenue recognition problem, you're getting your 3 marks on revenue recognition being an accounting area. But you found how much revenue has increased from the last year to mention that how much revenue is overstated. Now that finding of the percentage will give you another half mark. So it will go to 3.5 marks then. So be sure of these calculations and trends. They can give you incremental marks, save your time, and impress the marking team. And also adding to the professionalism or the professional skill marks you have in the paper. So any student making use of the trends or calculations, you're not just getting the technical marks, but you're also demonstrating your professionalism, which will help you boost your professional skill marks in the paper. Okay, now this is how the structure looks like. And then you go down, procedures and that. And one important thing, lastly, you need to write a conclusion after you finish off your audit risk. So immediately you finish off the audit risk, you will write the conclusion in which you need to justify that which of the ones above are more important risk and why. So you will write the risk above in the order in which they are coming in the case study. So I just followed the same order. Now, out of my 6 or 7 risk above, I need to tell examiner which 2 of them are more important and why. So which 2 of them are more prioritized. So which of the ones, any two are more important and why. So you're giving the emphasis on prioritizing. So the important thing is that a lot of time the student says this and this risk is important and they put a full stop and ends. They're not telling this and this risk is important and why. Because it involves estimates, because it involves a degree of uncertainty, because it involves management biasness. What? Need to give the underlying reason, or it is important because they are of the most significant amounts. They surpass the materiality. There should be some reason. So if you're missing on this why, you're not scoring. Conclusion. So conclusion has to be maximum 2 sentences long, not more than that. At times I've seen student writing conclusions going up to 3 to 4 sentences. Not at all. 2 sentences. In the first sentence, you tell this and this risk is important. And in the second sentence, you justify why these 2 are important. That is it. So see the format: briefing note, introduction. You put the materiality paragraph either after introduction or immediately under the heading A. Then materiality takes away 3 marks. You go in the order in which I found the risk, and then you put a conclusion. Followed by that, you will write procedures. Then followed by that, you write the answer for factors in placing the reliance. No need to put the conclusion at the end of the briefing note, unless and until there is a requirement in the C part or the D part, which asks you to evaluate. You can put another conclusion for that as well. For example, in the D part, you have ethical and professional issues, evaluate the ethical and professional issues. So even after the D part, because the question is asking to evaluate, you will give a conclusion again, but that will be a conclusion for ethical and professional issues. Business risk will never have a conclusion. Be very sure of that. though we have no business risk in this mock exam, but I've seen so many student emails where they write a business risk and even give a conclusion of a business risk. Business risk need not to have a conclusion. Okay, now with this structure, let's look at the student's answer and let's see what good have they done. I'll be emphasizing on the marking scheme looking at the student answer, and I will be guiding you about anything extra to write because I think in the script 1 and 2, I will be showing you none of the students have done an analytical review, which was quite an opportunistic point in this mock exam sitting and could have saved you a lot of time just by doing a simple calculation and linking that down with the listed company. So I think this point right over here is the one not done by any student. So at least I can write it down for you and you can benefit from it. Now see how I'm writing this point, analytical review. The revenue for the Thornham textile company has increased by 38.5% over the last year, and the profit before tax has increased by 35.4%. This is a significant surge over the last year. See, significant surge is my judgment, and judgment is professional marks. This is a significant surge over the last year. And as the company is listed, it creates a risk of management bias in presenting favorable results for shareholders. Being the first year audit, see, again, I'm exercising my professionalism here. Being the first year audit, being the first year audit for the audit firm, the audit team need to be skeptical when auditing areas around revenue and profitability to address increase inherent risk in these areas. Now, you will be having some question mark in your mind that we never write mitigation. But sometime to demonstrate your professionalism in a scenario like this, you can write something like this, what I'm telling you, that being the first year audit, we need to be more skeptical in the areas of revenue and something around profitability, because there's a greater inherent risk that they could be manipulated by the management. So examining team would like what? That I've related that this is my first year audit. I've related that being the first year audit, I need to be very skeptical about the rise in revenue and profit. And I need to address that through my better approach when I start to plan this audit. So this is more like professionalism coming in here. This is not like you're writing an action, but this is more like demonstrating professional judgment or a sound professional judgment in context. A significant search was also a judgment. So this sort of relationship, connecting with first year audit, connecting with listed company, connecting with financial numbers, this sort of a management bias will give you 2 marks. So I wrote this down because none of the student wrote it. Okay, now let's go down, evaluate what the student did right or wrong. Okay, just let me share down with the student scripts with you now. Okay, I hope you can see in front of your screen a script number 1 followed by a script number 2. We'll keep switching between 1 and 2 to find good and bad points. This is the script 1 from a student, starting with the briefing note format, 2 from subject date. When you're writing subject, no need to write the word RE. So at times the student do these additional things. No need to put this emphasis on the word RE over here. Just subject, that is it. date, introduction. So he's writing the introduction saying, I am providing this briefing note, which includes the evaluation of significant risk and so on and so forth. Quite a fine looking introduction, quite a reasonable size introduction. Should not be more than that. 2 to 3 sentences, you should wrap up the introduction. Not necessarily you use the first person language. You could have just said the purpose of writing this in the briefing note, not saying I. So normally refrain from the first person, just say the purpose of this briefing note is to include whatever. So just write it in the third person. Okay, then the student went down, started to evaluate the materiality. Just give me 1 second. The student went down writing the materiality. We know this is the first year audit. We know the profit before tax was $8.8 million. So let's see how the student went over this. Materiality is based on profit before tax. PBT of this company is 8.8 million. By using the traditional benchmarks to assess the materiality level, 5 to 10%. At the lower end, the materiality would be 8.8 million at 5 at 4.4 million. At the upper end, it will be 8.8 million. See, he's doing something wrong over here. 8.8 million is the materiality as a whole. So what should have been done rightly here? The values are given wrong. Approach is right. 8.8 million into 5% is 0.44 million, not $4.4 million. $4.4 million is like 50% of $8.8 million. So this value over here should have just been $0.44 million, being 5%, right? And this same goes with the other value here. That should be $0.88 million, being 10% of the amount. So even though he used the right perspective, but the calculation is wrong. So it's putting a wrong impression on the marker that the student is not doing the right calculation, reaching the AAA level. Okay, because this is the first year audit, and we have to test controls earlier at Tom and Textile, the opening balance may not be carried forward appropriately. There is a lack of accumulated knowledge, which increases the detection risk. Being the first year audit, we should use the lower end of the materiality, which is $4.4 million. Again, this is not $4.4 million. This is $0.44 million. So that is something which needs to be corrected. So it's again $0.44 million. The justification is right. We're using the lower end because it's the first year audit. But the student is not getting 3 out of 3. He used the threshold well, 5 to 10. He used the basis well, first year audit, but he did the wrong calculation. So maximum he will fetch will be 2 out of 3, not 3 out of 3. So he's losing 1 easy marks here. Just in a hurry, you used 4.4 million. 4.4 million is 50% of $8.8 million. It's 5% of $8.8 million is 0.44. So that was technically wrong. The other student I'll show you have done better. But again, he dragged the answer around materiality. He just went on explaining a first year audit, opening balances. He could have cut short the story that we should use the lower end of materiality because it's a first year audit. The detection risk is high. So the auditor needs to exercise more skeptical mindset and due care. So for that reason, we'll keep the materiality level at 0.44%. You could have wrapped it up quickly. So it's the first year audit, detection risk is high, and we need to be more skeptical. So for all that reason, the lower end of materiality at 0.44% sounds better. Let's look at the script 2. Was it better than this student? In the script 2, again, the student is starting with 2 from subject date. So at least he's not doing any blunders so far. Introduction, again, quite a good looking introduction. Then he wrote the heading significant audit risk. I just mentioned you can write materiality above A, under A. So the previous student did the other approach. This student is writing it under, fine. The PBT for the year ending 30th of September is $8.8 million. The materiality range is 5 to 10, which means $4.4 million and $8.88 million. Perfectly right. Since this is the first year we are performing the audit, we have less knowledge of the business, which will increase the detection risk. It's appropriate to set the materiality level at 4. Very crisp. That is what I was saying in the first student answer. First, he did the wrong calculation. Then followed by that, he dragged it. This student just went so crisp. 8.8 million, 5%, 10%, being the first year audit, detection risk high, you should use 0.44. How blunt the student is. Perfect time-saving equation, 3 out of 3 marks for the student on the way he drafted the materiality. So this student is fetching 3 out of 3. Perfect. No issues at all. So I hope you're getting this analysis between script 1 and script 2. Okay, just 1 second. Okay, now you move on. We had 3 marks gone, 19 marks remaining. You need to go on with your risk. Every student started with the new audit client as the risk number 1. So this student went with new audit client, and then he wrote something about the halt factory. From the halt factory, he went down to the redundancy cost, because redundancy cost was an associated risk with the halt factory. So halt factory was more about IFRS 5 discontinued operation, an asset held for sale. But with that asset held for sale and discontinued operation, they were making employees redundant. So we had a redundancy provision as well as an extra point coming out of the paragraph of halt factory. So that is 3 and 3.6. So we found halt factory under 3 marks, but halt factory will break into 3 and 3.6 marks. So I fetched up to 19 marks when I was just making a structure. So that will go up to 22 marks. So now you can choose the best 19 marks you want to write answer on. Then opening of new branch in Farland, he's going in order, share-based payment, because he's not using anything from the analytical review, then litigations, and then the flood damages. So very good flow of the answer. He didn't make use of analytical review because he got 2 points from the halt factory, redundancy and halt factory. So automatically the student is reaching the 19 marks destination. But the bad thing the student did, right after the end of the audit risk, can you see there is any paragraph on conclusion? Which of the above 2 risks are more important and why? There is no conclusion here. No conclusion is given right after audit risk. And you know what is the purpose of giving a conclusion here? That was not given. So even though the flow was good, the structure was good, we're not going deep inside the audit risk. I'll be scanning that just a few minutes later, but let's just looking at the structure, the student went perfectly fine. Then we had principal procedures on the planned closure of halt factory, and then the procedures on the share-based payment scheme. We had a total 10 marks of procedure. He made 5 procedures under halt factory, 5 under share-based payment scheme. That's a perfect split of marks. Excellent approach. Then he went down discussing the last requirement. That was the factors to place reliance on the internal auditor. He used the first factor, experience of the team, independence, documentation, and finally has given a conclusion. This conclusion should not come down here. This is wrong. This conclusion should have come above when you wrote the audit risk answer, because in this conclusion, the student is giving a conclusion of the audit risk, but he's placing it wrongly. You're losing your professional marks. Just let's read the conclusion to see whether he justified which of the risks are important, even though he placed it wrongly. The significant audit risk in Ham Textile Company, being a new audit line, which increases our detection risk and opening balances, followed by the opening of the new branch in Farland, relocation of production and closure of the halt factory, and the share-based payment scheme being the first time the such scheme has been introduced. The team would be skeptical. See, he's just mentioning that the first year audit, detection risk, opening of the branch, relocation of the production, closure of this share-based payment scheme, this is all important, but not justifying why. You cannot just write so many risks are important. You just need to write 2 of them are important. Choose the 2 which are most important, either on the basis of quantitative or being more areas where estimates are used in. I'll just tell you what's the best way to write a conclusion. But this student conclusion was wrongly placed, and the way the conclusion was written is wrong, because the student is saying this, almost writing everything and saying this is all important. So conclusion is wrong. Placement is wrong, right? So both things are going against the student. Wrong placement, and the next thing is not very impressive, not very impressive. So both going against this student, even though he found the right flow. Just let's scan quickly the student one answer for this. He started wrongly with materiality. Then he went down, moving into the new audit client. The approach is going fine for both students, going in the order. Every student picked the new audit client as the first risk. Closure of the halt factory. Again, two risks under closure of halt factory, one being the redundancy and one being the asset held for sale. So those two are going perfectly fine. Then the new operation in farmland, share-based payment schemes, litigations, flood damages. So every student is going in the order, which is something soothing for me as a tutor, that you're following the approach taught to you in the previous webinars and mock debrief. Then again, the student did not wrote any conclusion, no conclusion given in here as well. So this is again something of a nightmare for me as a tutor, having taught this so clearly. No conclusion given. I don't know why this has been missed by both students. No conclusion given. We'll see whether this is given at the end of the answer or not. Okay, then the student went on. And the student went on with procedures. He wrote procedures on the halt factory, and then he wrote procedures on the share-based payment scheme, good 5 each, just like the previous student. And then he discussed the factors to place reliance on the internal auditor. The first student, the previous one, used headings to break the factors, which was more impressive presentation for professional marks as well. This student just went down into paragraph, though the paragraphs are very nicely split in. It's not just like very long paragraphs. And he also wrote a good enough answer, giving conclusion at the end. So firstly, it's wrongly placed. It's wrongly placed, number one. Wrongly placed. Let's see whether the content is right. Based on the numerous significant matters identified above, the halt factory held for sale, share-based payment scheme, and the new operation in farmland 3 are the most significant matters identified, not matters, risk. Those risks can be mitigated and reduced at acceptability low level by assessing senior and experienced staff. He's writing the mitigation of the risk. He's not telling why the 3 risks are important. Firstly, he wrote again 3, should have been 2 maximum to save your time. And why are they important? So again, the student is telling these risks are important, but failing to tell why are they important. And the wrong thing is important. No need to write mitigation. No need to write mitigation, right? So I'm not very happy with the student conclusions, wrongly placed, not very nicely worded. So I need to show you my way of writing it shortly. I'm very happy with the approach, ABC. I'm very happy with the flow of risk, right in the order in which they were coming in the exhibit 1, 2, 3. That is good among all students. Quite good depth of answer. The number of procedures both students wrote was good enough. They didn't miss on anything. If you look at the depth of each risk they wrote on, every risk seems quite good. Okay, now one thing which I would like to emphasize on before I move to my answer is, we know each well-evaluated risk is worth 3 marks. Other than like new audit client, I can give you 2 marks because that due doesn't have an accounting treatment there. But you can get an extra 1 mark for any calculations. Look at the share-based payment scheme point the student used. In the share-based payment scheme point, you can see the student has done some sort of a calculation. Just let me identify that for you. You can see the student has done a calculation here. Right here, right over here, he's saying 1,000 minus 150, 850. The relevant cost of the share payment scheme in the first year is 0.88 million, which is 10.5%. He's finding a value, 1,000 minus 150. And then he's saying the relevant share-based payment expense for the first year should be 0.88 million. So he's finding some sort of a value which is not given in the scenario. Let's see whether the student number 2 has done that sort of an analysis as well. And there was one more calculation right here. The new operation in farmland. If you remember, the examining team was giving us the exchange rate between the pobbles and the dollar, because the new operation is in farmland where they're using a currency which is pobbles. So 14 million pobbles was the amount given in. And then the examining team was telling us that 2.2 million pobbles equals to $1. So he found the purchase cost equivalent to 6.63 million. I think the purchase cost was given in pobbles. He converted the purchase cost into dollars because the whole scenario was going on dollar. So at least he did a calculation, which will easily fetch him an extra 1 mark for this particular calculation. Let's see whether such calculations been done by this particular student. You can see this calculation being done here by the student as well for share-based payment scheme, 1.875 million, showing in the bracket 2.50 into 1000 into 750. We'll see whether this calculation is right or wrong, but at least I'm just showing you that the calculations are being attempted. With the value is right, the value is wrong, I'll be guiding you on that. So this value, and then he's saying this value is above the threshold of materiality of 0.44 million. And again, he found this 6.31 million, 14 million pobbles divided by 2.2, that is a pobble to dollar exchange rate. And he found that this $6.63 million is material. So at least he's finding those calculations. Everywhere you do a calculation, you're getting 1 mark to a maximum of 3. So 2 calculations, one around share-based payment, one about farland, and you're fetching straight away those 2 good marks if your calculations are right. Okay, now just let me get back to my situation. Just let me go back and share my okay. Now you can see back the practice platform. Just need to write something on my own. Okay, we got this word processor ready. I've shown you the materiality paragraph. One student got it perfectly right. I'll be sharing those answers with you. New audit client, halt factory. Halt factory will break into 2 parts. One part of the halt factory is the asset held for sale. And one part of the halt factory is basically the redundancy provision. So both can fetch you 3 and 3. So that means the total marking scheme for halt factory will go up to 6. So that means 6 and 2, 8. 2 for the management buys, 10. 3 for the share-based payment, 13. 3 for litigation, 16. 3 for flood damage, 19. So sorry, 3 for the flood damage, 3 for litigation, 3 for share-based payments. That's like 9. 2 for the management buys, 11. 3 for operation in farland, 14. 6 for halt factory, 20. And 2 for the new client, we're getting up to 22 marks. So we need to choose the best 19 to write on. We can skip any of the rest still and getting up to the 19 marks. So you have a lot of opportunities here, and you need to write just 19 of this. Okay, now what I need to show. Let's go to the background information. Okay. Now, if you look at this relocation of production and closure at the halt factory, I'm just reading through this paragraph. It says, in order to reduce the cost of production and to allow the company easier access to cheaper end of the clothing market, the company has decided to close the second largest of the 3 mills, known as the halt factory. So that's where the asset held for sale and discontinued operation is coming in. And the company can relocate a very small number of staff from the halt factory to the central factory, which will become the company's main production facility. However, 150 staff from the local workforce will be made redundant. So there is a redundancy provision coming in at a cost of 1.2 million. You will compare this cost, is it above materiality or not? So wherever you find cost, you have to compare the cost, comment on whether it is material or not, because wherever you're commenting on the materiality, you're fetching marks. So 150 staff is being made redundant because of the decision to close the factory. It is unlikely that the machinery used in the mill will be transferred, and it is expected that this will be sold along with the property. The carrying amount of the halt factory, including machinery, is 4.7 million. So carrying amount is 4.7 million. An external surveyor is currently carrying out the valuation of halt factory, which will decide what is the recoverable amount of the factory, because you need to value it at the lower of the carrying amount and the recoverable amount. And the recoverable amount is the higher of the value in use less the fair value, or the fair value less the cost to sell. So a lot of estimations can make this area a significant audit risk. That could be one reason why you say that halt factory is a significant risk, because it involves a lot of estimation around the fair value and the value in use, or the recoverable amount. The management of the textile company has been in discussion with another company who may be prepared to buy the halt factory as an ongoing business. If this were to go ahead, management believes that this will be able to sell the halt at $4 million. They might be selling halt at 4, though the external valuation is still going on. There is a chance that you might be selling this at $4 million. So $4 million might become your fair value, less the cost to sell. Your carrying amount is 4.7. So you need to recognize an impairment of 0.7 million. Even that impairment of 0.7 million is above your materiality level. Another comment. So impairment, a difference between 4.7 and 4 is again above materiality level. If impairment loss is not properly recognized, or the assets held for sale are not written down at 4 million, instead they're written at 4.7 million, will even overstate your assets and overstate your profits if you're not recognizing the impairment loss. So you're commenting on the materiality of 4.7 million. You're commenting on the difference between 4.7 and 4 million for extra points. Okay, you might sell it to someone at 4 million and the buyer would retain half of the existing workforce. So 150 staff will be made redundant. From that 150, half of the workforce can be retained by the buyer. This is an important information to do another calculation. If any student is clever, that student might think, we were making 150 employees redundant, and the provision for that 150 employees was 1.2 million. Now, if the factory is sold to the buyer who is giving us $4 million, he will take 75 of those employees. So eventually, you're just making redundant 75 employees. So the provision amount will go down. So one student will take that 1.2 million, will divide that 1.2 million with 150, and then multiply that with 75. You will get a reduced amount of provision for 75 employees, which will be roughly half of it, $66, 0.6 million, which is still above the materiality threshold. So you can do this extra calculation here. Just let me show you that. In the redundancy provision, you can say that redundancy provision is $1.2 million. If the factory goes to the buyer you are negotiating with currently, he will take. Okay, welcome back. We just have some sort of a disruption. Just let's get back and running the session. We were discussing the point around redundancy provision when we got disconnected, right? So we were discussing that $1.2 million is the redundant. Okay, welcome back. We were discussing the redundancy provision when we got a bit of disconnectivity. $1.2 million is the redundancy provision, and this is for the 150 employees, right? But if the factory goes to the buyer who is offering you roughly $4 million, he will retain half of them. So eventually the redundancy provision should be recognized for 75 employees if that goes ahead. So you can show some sort of a calculation to the examiner that this should be multiplied by 75 employees and it will become $0.6 million. Half of what currently the management is quoting. This is still material. This is still material because the materiality threshold is $0.44 million. So again, this is a calculation. Not every student will do that. 1.2 divided by 150 into 75 is 0.6 million. That is the provision that should be recognized if the factory goes to the planned buyer who intends to buy it at $4 million. So that is one. where you can get at least 1 mark for the calculation. So that's one calculation involved in. Maximum 3 marks are there for calculation, right? So the maximum calculations you can do in a scenario is 3. Okay, so we were discussing where can we fetch an extra 1 mark for showing the calculation, just like we did in the redundancy provision. Now that is a value which has been specifically identified through an effort. So we got that value 1.2 million, divided that by 150 employees, then multiplied by 75. We thought that this should be half into 0.6 million. It is still material, and we get 1 point for that calculation. And there is another specific calculation like that in even the share-based payment scheme. If I can show you that, you go down the share-based payment scheme. So this will automatically become 4 marks instead of 3. You open the selected financial information and you check on the paragraph for share-based payment scheme. It tells us about that in order to motivate the employees and directors, the company has introduced a share-based payment scheme for all its existing staff. The share scheme provides option to the staff to buy 1,000 share each at a price of $2.50, which is the fair value at the grant date at which they should be recognized, providing they remain with the company until the vesting period in 30th of September 20x7. So we are in 20x5, so 5, 6, 7 for 3 years, right? The options were granted on the 1st of October 20x4, that's at the start of the financial year, and had a fair value of 1.70 at the date. So sorry, this is the fair value at the grant date at which they should be recognized. So fair value at the grant date is 1.70 at which we should be recognizing the expense. The company does not expect to lose any staff. So that's an estimate of the management. Again, that could make this particular share-based payment scheme as a important audit risk, considering estimations are coming into. If I'm concluding on audit risk, I will conclude on the ones where there is estimations coming in, just like the recoverable amount around the Halt factory, a share-based payment scheme, a management estimations that there will be no losing of staff, except for the staff expected to be made redundant at the closure of 20. So currently the staff expected to be made redundant is 150. We're not taking 75 because 75 is conditional on the basis of whether the factory goes to the buyer. If that particular buyer takes it, then the 75 employees will go to them. But currently that is just on the basis of what if. We calculated the revised redundancy provision on that what if analysis, but for this particular calculation, we'll only be making use of 150, which is currently the definite number, which will be made redundant. So Thorman Company Textile Company have 1,000 employees at the 1st of July. So if I need to calculate the share-based payment expense and then show examiner, is it material or not, I will just make use of 1,000 employees minus 150, which will be made redundant. So 1,000 employees, the people which will be made redundant is 150. Currently, the definite number. So 1,000 minus 150 will take me to 850. Each will have 1,000 shares. So 850 multiplied by 1,000 shares. And then each has a fair value of 1.70 multiplied by that. And then dividing it by 3 years because the vesting period runs for 30th of September 20x7. Now that will give me some sort of a value. So if I go back to my word processor under this share-based payment scheme, if I tell examiner that there are 1,000 employees minus 150, which will be made redundant, so is equal to 850. See, I'm doing effort. 850 multiplied by 1,000, that's what they will be getting, shares into 1.70. That's the fair value at the grant date, and then dividing it by 3 because it will be vested over a 3-year period. So the recognition of the expense for the current year will be something whatever. So you will get a value here, and this value will give you 1 mark. So the share-based payment scheme will take you not just to 3, but 3 plus 1 is equal to 4 marks. In exam, if you're writing on a risk around an accounting treatment where you're commenting on the materiality, you're commenting on the treatment, risk, and impact, but I need to derive an amount. That deriving of an amount with an effort of a formula, and that is shown, will give you 1 mark, just like we did above in the redundancy provision. But something like simple calculations, for example, we found the impairment loss. The carrying amount of the halt factory was 4.7 million, and the buyer was willing to take it at 4 million. So we thought, okay, 4.7 million and 4 million, that is 0.7 million of an impairment. Now that's something very definite. Every student will do that. You will not get 1 mark for that, but you have to still do it because you might get some professional marks there. More importantly, we found that pobbles and dollar relationship, that $2.2 pobbles equal to $1, and you use that exchange rate to find what is the dollar million value of the plant and equipment brought. Now every student will do that because that's something very definite being shown by the examiner. Such values will not be giving you 1 extra mark. But look at the share-based payment. That was quite a good calculation. The 75 employees will be taken by the new owner. That was a thoughtful point. And we thought, okay, if that goes ahead, then the provision amount should be halved. Now, not everyone will be thinking of it. That is giving you an extra 1 mark. Some calculations are very obvious. 95% students will do that. That's not where you're getting those 1 extra marks. So some of your risk can go up to 4 even. So when you're writing an answer for 19 marks, be very sure that, because if some of them is giving you 4, like share-based payment and the halt factory, the redundancy provision is giving you 4. So this will take you to 3 plus 1 is equal to 4. So already 4 from here, from the share-based expense, that's 8. 3 from the asset held for sale, that's 8 and 3, 11. 11 and a new audit client, 13. Then operations in farland, 17. Analytical review, 19. Litigation, 3, 22. Flood damages, 3, 25. Now think you have a much greater space. You need to write for 19 marks. Now you can bargain. Now you can choose the one best to write on 19 marks. Now, when you're writing a conclusion, your conclusion will tell, for example, because I was not happy with the conclusion given by the student, so you will say, on the basis of the audit risk evaluation above, the risk associated with the halt factory, and the share-based payment scheme are 2 most significant risk, because both of them involve estimations of the management around recoverable amount and that no employee will leave company, making them more subjective risk, or making them more subjective inherent risk. And we know anything which is subjective is more risky, inherent risk. So these are the 2 areas where you should be focusing on, and why. So it could be quantitative factors, but it's not just you're saying this and this is important, but you need to justify this and this is important because they have the most significant amount, this amount and that amount. Or the best way is to look at the ones involving estimates, because anything where estimates comes in becomes highly subjective, more important inherent risk. Because if you have understood the ISA 315, you have a definition of a broad spectrum risk. These are broad spectrum risks where subjectivity comes in. So this is a sort of conclusion. This is a maximum length of conclusion. Only 2 and why. So that conclusion was missing in most of the student answers, wrongly placed and wrongly worded. I hope you're getting a benefit of conclusion. You're getting a benefit of the good and bads you got from the student answers. Some extra things you got today was the 1+ mark where you can gain from calculations, and you can get down in a better manner with this answer. So ensure that you structure the briefing note well. You go in the logical order with ABC. You go down in a flow of the answer. Try to get the risk which gives you 19 marks right upon the ones you're good at, because you were having a space up to 25 marks, and then ensuring you write a conclusion, then procedures, and then the factors. Okay, one last thing. In factors in placing reliance, if you saw both student answer, we had 8 marks for the factors to place reliance on. And in the exhibit 4, we have something about it. But generally, when you look at the factors to place reliance, every student will think about independence of the internal auditor as one factor, then competence, experience as a second factor, then something about documentation, competence, and experience. So you have these 4 points coming from the ISA. And you will say, okay, I'll connect them up with the case, and I'll fetch my 8 marks. I even mentioned this in the overview of the mock debrief, that technically, if you look at 8 points, getting 8 points is very difficult here, because every point is worth 1 mark in AAA. So if you say, I need to write 8 factors, that's next to impossible. So in situations like that, you can think in the exam paper that the marking scheme is 2. I'll write 4 factors. I'll connect them up well with the case study. And in knowledge areas, I can still fetch 2 in this area. These are rare circumstances, right? Now, if any student write journal independence, journal competence, journal experience, journal documentation, will not be getting marked. You need to link them with case. Now, if you go to the exhibit number 4 and you start reading it, it says, during the year, the internal audit team performed work on the company's internal control and produced a comprehensive report for the attention of the audit committee. The report includes documentation of the systems, results of the control evaluations, and highlights of examples where the best practices have not been followed. Now, see, this is the documentation. It is such a robust report the audit team has produced in, and that is where, when I'm writing the point about documentation, that as an external auditor, I would rely on the internal auditor if the report is well documented. The report has evaluated the weaknesses and deficiencies in the internal control. The report was well communicated to the audit committee. Now, I need to link this with the paragraph, this paragraph. The internal audit team produced a comprehensive report, and you continue. And you just rephrase this. You try to write your own words into it, and you write a proper explanation around it. This is not the answer. I'm just saying you need to copy paste, but alone copy paste is useless till the time you rephrase. You write your own words into it, you explain something on your own, and then make use of this copy paste, and that blends with documentation. You go back to the note number 4. The audit committee has suggested the audit firm, the Sheringham Associates, to place reliance on the report in order to reduce the amount of substantive testings to be performed. The audit committee also suggests that the internal audit team could be used to perform some testing of controls for the purpose of external audit committee. So internal auditor is reporting to the audit committee. So they have independence because they're reporting to audit committee. And I think, if I'm not wrong, this company was established. This is not a recently listed company. The company is a listed company responsible for manufacturing this, and so on and so forth. Just let me check the partner email. The audit committee is keen to make use of the internal audit team, and so on and so forth. So this is not a company which has got recent listing. So that means we believe that internal auditor is working in the company since they are listed. So that could be quite a few years since they are there. So they must be having a lot of experience as well as competence. Competence, you can evaluate the competence. You can check the qualifications. You can check the qualifications of the internal audit staff just to have a quick scan. Are they competent enough or not? So you can check qualification of the internal audit staff to confirm competence. How long are they working? You can have you can check how long are they working as internal auditors. So you get some sort of experience something like that. Audit committee is a very visible point here. Comprehensive report is a very visible point. Competence and experience is something relatable with your knowledge, but you blend the knowledge with bringing the terms that you need to check the qualification of the internal audit staff at the Thornham textile company just to ensure they are competent enough, so on and so forth. Now, these are 4 good points, but you have something extra here as well, which can be of value. You go back to the note number 4 and look at these last few sentences of the note number 4, which I'm copying and just highlighting for you. The audit committee suggested that the auditor place reliance on this report to reduce substantive testing. Note this is a first year audit, right? And the audit committee also suggests that the internal audit could be used by the auditor for some testings on control. So there are 2 particular suggestions. One is to use the report and reduce the substantive testing. And second is to place reliance. The internal audit team can help you with internal audit testings. Know the fact this is a first year audit, right? Just keep in mind. So I'm just bringing these 2 points here from the exhibit 4. I'm just copying it here and I'm doing some analysis. I'll just break these 2 points into 2 separate paragraphs. The first one is the audit committee suggested that audit firm places reliance on the report in order to reduce the amount of substantive procedures. Now, first of all, you need to raise a question here. Can the auditor place reliance on the internal audit department? First of all, depends upon your local laws and regulations. Do they permit? Now, we know there's a broader ISA, but every country has its own national laws, which is released by their local institute of chartered accountancy, which tells us whether you can use the work of internal auditor or not. So first of all, as being the audit firm, I need to see what are local laws in my country. Do they permit me using the work of internal auditor or not, despite the fact he's independent, competent, experienced, and everything. So the suggestion is good, but the suggestion needs to be brought into the light of the laws and regulations. Depend upon the local laws and regulations. Do they permit me? If yes, I can use it. But moreover, being the first year audit, risky areas can't be delegated to the internal audit team. Only routine areas, non-risky areas can be delegated to the internal auditor, because that's the second suggestion of the audit committee. The audit committee suggests that the internal audit team could Okay, so we were just discussing about the 2 specific statements given in the exhibit number 4 that the audit committee has suggested that you can use on this report and you can reduce your substantive testing. So first of all, you need to assure that whether the laws and regulations permit you for that. And more importantly, if they do permit you, this is your first year audit, right? So how much reliance will you place, considering the first year audit have a high detection risk and you cannot just delegate risky areas to the internal audit team for control testing. You want to keep most of the things with you in the first year audit. Yes, routine areas, non-risky areas, you can take help from the internal auditor to make up your efficiency, but not the critical areas, not the significant areas which you must have identified as significant risky areas in the requirement number A can be delegated to the internal audit team. So you need to carefully write the comments around the suggestions of the audit committee. There are 2 suggestions. One is that the internal audit team can use to perform the control testings for you. So you need to mention the point that this is a first year audit and risky areas have to be kept with me, not to the internal auditor. And they suggested that I can place the reliance on the report. So I need to check my local laws. If they do tell me, I will, but I need to be skeptical about being the first year audit. So these are 2 extra points you can write on, along with independence, competence, experience, and documentation. So total becomes 6 points, and you have an 8 marks answer. Still, you're not reaching 8. So that means either there is something wrong with this marking scheme of mock exam, because generally there are some issues in the mock exams when published by ACCA, because they're taking the copy paste from the previous exam settings. Every point is worth 1 mark, but you're getting 6 instead of 8. You look at the marking scheme of the mock, they're telling you 2 marks for valid point, which is not the current marking scheme of the recent papers in AAA. So 6 points in exam, if you come across such situation and you're fixed, you're saying, okay, I can maximum reach 6, you just stop here and say, okay, that ends the story for 8 marks.